We are live. Let's see if Marine Corps Brat ends up being the first one in stream. Or at least the first member of chat. Let's go back. I want to look at. What are we on? A 30-minute, 4-hour chart. Where was that? So what I actually wanted to look at here. Let's get a horizontal line. Just going to kind of be playing around here a bit. Wanted to have a look at from Wednesday. Yeah, that fall off in the morning. That fall off was pretty bad. Still wondering if we broke that channel. Let's go and get another trend line here. Want to build this wedge out, and we were going off of that. Well, I was hoping AMC Trapper would be here by now. Go and see what he's up to. Let's go ahead and get a share out on this. That was just my work phone giving a beep. We're going to go ahead and share this out as a tweet. Doobie doobie doo. might we get a better... I think that's actually more accurate right there. I'm going to go ahead and delete that line off. Want a little bit tighter of a horizontal. Yeah, because that one actually does line up better. Lines it better with Wednesday's line. So we did break through that wedge. Wait, we're through that wedge at the end of the day. Where was that run up? And I am not sure if any kind of notification's gone out on this. Let me get some tags out here. Of course, who knows how many people are out shopping for Black Friday, for the end of the week. So how far in are we? The question is, do we have an upper channel? There's not really one that's clearly defined. So yeah, jumping over to the options chain, having a look here, and the verticals. Verticals on AMC that we were looking at on the put side of the house was the 3435s. Those were the $21 on Wednesday, which actually went up in value. They hit 35 today and closed out at 27. So there was a window to get in, make a pretty penny on those earlier. So those would be entry points, depending upon how the market looks on Monday, to re-enter back in covered calls that were put in for 45. Of course, those were nowhere near to being in danger. Going back over to the single on the call side of the house, if we look at open interest, still not too much open interest for next Friday coming up. In fact, the ceiling really has come down on it quite a bit. But initially it was looking like we were going to see higher highs at the end of the week, but of course, being a low volume week, this is partly to be expected, which this could almost be a prediction of what we should expect Christmas week also, with the options that will be coming due then. And let's go ahead and go out to this will be the week prior to Christmas. And I wanted to have a look at the verticals here, because the same play that we're in right now, those are currently up to $55 a contract, and you're locking in the $100 per contract for collateral. Hey there, Simon. How is it going? It was real quiet in here. Not much, just kind of going over some of the option stuff. Where are all the bots at? I don't know where all the bots are at. Everyone had me hanging out here by myself. I know Trapper was asking what time the stream was going to be tonight, and so I thought he would have been one of the first ones in here. Of course, not much about to hit the gym. Man, you're in the gym quite a bit. I wish I was that motivated to work out. Then again, my line of work, there are times I'm carrying a 90-pound ladder through the snow, so I get a pretty good workout off of that. Well, what on earth happened here? Oh, there we go. Well, no. Yeah. Yeah, we've had snow on the ground here for quite a while now. Why is my chart so weird? Oh, there we go. Hey, there's Trapper. How's it going, man? Well, Simon's fixing to hit the gym. I was just looking over some stuff from Wednesday that I'd gone over on the bull put spreads. I'd shared this on Wednesday. It was actually from a position that I'd entered in that morning. Was looking to get into a position further out, going towards the week before Christmas. I was kind of setting up a little savings account for myself for a low volume dip. Stuff in my face again. Leftovers from Thanksgiving. That's what I'll be having also. Fist bump, fist bump. Okay, so Trapper, the bull put spread is actually it's one of my meat and potato option trades I like to do. You know, I always like doing the covered calls. You always hear me talking about those. Well, on the low end, when the stock's being driven down, a bull put spread is a two-legged option, a two-leg option that you can use for covering your low end. Because you know you always want to play your calls when the market is up. Well, playing puts is when the market is down, but it's still possible to play puts and be bullish on your how you want to play your stock. So when you go in for your regular options, your single contract, you know, buying calls, buying puts, we're going to go on the put side of the house. Usually when you buy a put, you buy puts in anticipation of the market going down. It's a way to protect yourself on the low end. That way, you know, say we're sitting where we are right now, but you're afraid that the stock price is going to drop to $20 a share. Well, what you do, you know, you could enter in a put at 35, pay the premium, and if the stock price falls, say it falls all the way down to 20, you have the right to sell your shares at 35, regardless of where the share price currently is. You can sell at 35. So it's a low end protection for yourself, but you can actually use it in combination with selling a put at the same time, and this gives you a low end buffer for if the stock is moving laterally, if it's trading sideways, or if the stock price goes up. So what you end up doing on here, you have two different strike prices. And what you would do is, say you wanted to play 34.35 bull put. What you would do is you would sell a put at the $35 strike price. And you would end up paying $278 or $2.78 per share. At the same time, you would buy a put at the $34 strike price, which would cost you less. So basically, you would be collecting the difference between the two. Hey, wrestlers in the house. Oh my God, everybody. So much blue in the chat. So what you would do is you would actually collect the difference between these strike prices. If you had a bearish sentiment, you could take the exact same trade, flip it around, and it would be a bear put spread. And you could actually run a bear put spread higher to do the exact same thing. So if you have Webull actually is a setup where you can go in here, and it's actually called the vertical on Webull. And you would go in, fist bump to wrestler. So you would go in, oh, let me get back on. So this is next Friday's option chain vertical. These are your bull put spreads. And if you look at the 34.35, you would end up collecting a $27 premium because you get 27 cents per share. So this is kind of a way to nickel and dime, but also to have yourself active in the market, because you know you can always buy on the dip, but you can use the dip for generating more capital. Now, whenever you're selling, you have to put up collateral. If you're selling a covered call, you put up the collateral of your shares and you collect premium. If you're selling a cash secured put, you collect premium, but you are putting up the cost of buying the share prices at the strike. So when you're doing a bull put spread like this, the collateral that you put up is the difference between your strike prices. So essentially, you put up $100 and you collect whatever the premium is from selling the contract. And the great thing about these is, of course, you know, when you're buying calls and buying puts, theta's working against you. Well, anytime you're selling, theta's on your side. This value will continue to depreciate, and that way, if you decide you want to get out of the contract early to free up your collateral, say you had $1,000 and you wanted to enter into 10 contracts. If you got in with these, Simon, yeah. If you got in these right before the close of the market, 10 contracts, you would have collected $270, and it would lock up your $1,000 until expiration, or until the first trading date after expiration date. So the following Monday, your collateral would be released to you. But essentially, you'd be sitting on that collateral that you put up for the contracts. And the whole reason you have to put the collateral is if this trade goes south on you, if the share price shoots down and you get exercised on these contracts, this is a way that the market makers protect themselves. This is a way how Webull will protect himself, because if you get executed on, the $100 that's secured is actually the difference in the price, to where if somebody, you were obligated to sell those shares. Well, if you had to sell those shares, you would end up buying the shares at the $34 strike price to fulfill your obligation. That's where the $100 comes in. It just makes it. It's basically it prevents you from getting margin called on this specific trade, and it's a way of them hedging against a possible downward market. So pretty much, if you were sitting on, say you had a spare $1,000 that you kept in your brokerage at all times, you could sit there every week. You could try and find a bull put spread. You could sell a contract that would collect you a premium, lock up that lock up whatever amount you had to put up as collateral for however many contracts you had, collect your premium, and when those contracts expire, well, you've already got the premium. You collected that up front. You could reinvest that immediately, and then at the end of the week, Monday kicks around, your $1,000 collateral is freed back up. You could enter into another set of bull put spreads, recycling that same $1,000, but it keeps generating revenue for you. So you have that $1,000 working for you to bring in more capital. And you could, every week when you do that, you could take, that $270, that $340, you could take that, and that is what you could actually use for buying the shares. So you have a recurring income. There's the eggplant. You would have a recurring income, which would every week you'd keep recycling that, have more coming in, where every week you could continue to buy, at the current, what are we at for the current price? I think we closed out about $38 a share. Well, if you were doing 10 contracts at once, you could maybe pick up 7 or 8 more shares a week. And, that's every week you'd be doing that. How long would it take for your portfolio to get large enough? Then all of a sudden, every 100 shares you get, which opens the other end, opens your upper end. Collateral on the bull put spread is the difference. Collateral on a put is the price of the strike times 100. That is if you're selling a cash secured put. If you're selling a single leg contract, we go over to the single. So say we're at $35.63. If you had $3,500, you could enter into a cash secured put position. They would lock up that $3,500 in case you get exercised, but you would collect $86 of premium. That's yours right away. You could immediately go out, spend that, buy 2 more shares, or just let it sit and wait for another option position to come around, or that $86 would be your money to do with as you please, but your $3,500 would be locked up until either you're exercised or you sell the contract back to free up that collateral. That is the hedge in case you get exercised. That is what would pay for those shares. But if you didn't have a problem with buying 100 shares at 35, you could keep doing that every week, collecting collateral until if the price dropped down to 35, you would get exercised and buy those shares. If you do that for 2 or 3 weeks in a row, collect enough collateral, well, you've pretty much made up the difference to where you could buy it at a higher price, because you were getting I would call it free money, but you were getting extra cash for investing in those cash secured puts and collecting the collateral on them. And all you're doing when you go to the vertical to do the cash secured put, or the bull put spread, the bull put spread, you're basically your maximum profit and your maximum loss are already verified. When you enter in, and most of them will have the P&L calculator. When you enter in a contract, it'll tell you, maximum gain. When you're doing calls, of course, your max profit is unlimited. Hey, Danelle, how's it going? pop in and hit the like button. Danelle, the first 15 minutes I was kind of by myself mumbling. So if you watch it later, if you listen to it later, there's not really too much information in that, so you can just pop in and go straight to the 15-minute mark, and unless you just wanted to let that run to bring up the watch time on it. But I appreciate you stopping by and hitting the like button. So Trapper, when you enter into these, you're already going to know what your max profit and max loss is. On a spread like this, your profit and loss are already predetermined. You will never lose more or you'll never gain more. So your max profit will always be the premium that you receive. Your max loss will be the collateral that you put up, the $100, minus the premium you receive. So essentially, you enter in $100 collateral, you collect 27, your maximum loss is going to be $73 per contract. And one of the great things about doing spreads, whether you're doing a two-leg, a four-leg, a multi-leg spread, you always know what your maximum loss is going to be, which means you can control your stop losses a lot better. Because whenever I enter into a covered call position, or when I sell calls or buy calls, I always determine where's max risk for me. What loss is the max loss that I'm going to take on this trade. When you enter into a spread option, you can have a lot wider of margins, or a lot wider of a risk, because you already know what your max risk is going to be. Just like when you buy a call. If you pay $300 on a call, you don't want to lose that $300. Well, in this, you're already predetermined, what your max loss is going to be, so you can control it a lot better. If you start to see it, slipping away from you, if you were uncomfortable if this went from a 27 up to 35, and you're like, no, that's getting, it's only a couple bucks, but if you're entering into, 10, 20, 50 contracts, and you realize your losses are starting to add up, and you're like, no, the losses are getting too high, you can close them out. You can close them out. Sometimes your volume is a little bit lower, so you might run into liquidity problems, especially if the price is running. That is one of the risks of these. But that's why you build yourself in enough of a buffer. When I entered in on these, our share price was over $38 a share. Well, from 38 you go down, you got to drop all the way down to 35 before you're even in any kind of risk. Did that make sense, Trapper? Hey, no problem, man. I mean, it's once you figure out the basics of them, especially the multi-legs, and you start to see, if you notice, I've got the graph up, and this was actually the graph that I went over Wednesday night, and this was kind of how I determined my entry point for the on Wednesday for the bull put spreads that I entered for next Friday. And I ended up discovering something about the analysis that I used for it that I didn't recognize before, and looking at it today, it actually kind of confirmed what I was looking at as far as, did I read the charts right? And it looks like, if you look from my support line, it looks like it almost came down, tagged my support line, and starting to run up. So I'm actually looking for a little bit of an upward trend back up to, the upper resistance on this wedge. So does anyone else have option questions? Yeah, I was going to be working on, I'm still trying to figure some things out with how all the programs work. I actually originally did not plan on launching this channel until next week, but with everything that was going on, and just hearing, where did I enter on the bull put spread? Okay, so let me get in here. So where was Wednesday? That's what I'm looking for here. Yeah, because there certainly is a lot to go over on it, and being able to do a video for each one and simplify them would I think that would definitely be something the community would be interested in. So, Trapper, what we're looking at here, this is the Wednesday morning fall off that we had. And when I was watching, so we fell off the cliff here into the ski jump, and we hit bottom. We ended up catching a bounce. Buying pressure stepped and we ran back up. But then we had more selling pressure came in and actually pushed us down further. So it looked like we were going to be on a bear run. Well, when we hit, I was looking, I think I was looking at the 36 range originally. If we zoom out to, if we jump on, I think it's the 30-minute chart, you can see it. But I was looking at the 36 holding up as support. So we actually bounced a little bit higher, right about 37.50, and started to run back up again. Well, I wasn't completely sure that the run was going to reverse, because we had already seen a lower low. But we ran up, we tagged a higher high, and the stock turned around, started going back down again. When we hit this next level of support, or this next low, we had our lower low, or we had our higher low. So we started to see a trend where we had the initial push down, caught a little bit of support, came back up, and got pushed down further. But then from there, higher high, higher high, higher high. We kept having higher highs hit. But the confirmation for me and where my entry point was, we had this lower low, we came up, we touched a higher high. When we dropped and saw the higher low and started on an upward trend again, that this was actually my trigger point that I entered back in at. I ended up getting in at $21 per contract, and these are for the bull puts that are expiring next Friday. Now, had I waited to today, there was a chance that we were going to have another low push, which we ended up having. But I don't have a crystal ball. I'm not a fortune teller. I can only go off what the charts tell me. And when I see a rise and then a higher high, a drop with a higher low, once we start moving up again, that tells me we've got an upward channel building. So that was actually my entry point that I got in. And I was, I think it was Justin who asked on Wednesday evening. He was asking about options trading and how people talk don't do options, and I explained it in that video. It actually, if you go to the Wednesday stream and go to 55.5 minutes, if you go to 55.5 minutes all the way through to an hour 12. I went back and I watched my own streams just to learn how to get, how I can get better at them, and also to check my own technical analysis, to check my own homework. And I told him the same thing. Had I been watching, had I had the capital available, because I always keep enough capital on standby to exit the positions I already have in case they turn south on me, to basically act as a stop loss. Well, when it hit and ran back up, this actually, if I would have had the money, this would have been an entry point. I would have been looking at buying calls for about 3 to 4 weeks out, and I actually probably would have ended up selling on this run of downward candles. When we ran up through this run right here, hit, and seeing this stretch of 5 in a row, this is probably where I would have exited. Now, of course, it's easy to be a Monday morning quarterback and say, oh yeah, looking at it after the fact, but looking at the charts and knowing how I like to work my analysis anyway. That would have been that would have probably been the setup that I would have been looking at. And going into it, if you do watch that video and you see where I talk about coming down, breaking through this wedge and tagging this support line, Wednesday I actually was looking to see if we follow this exact same trend. That's why I'm looking to see, we got a downward bounce right here. I was actually going to see about getting in. I might wait till Monday and check out, I might close out some prog positions on Monday if we get a little bit of a run. And I'm hoping I'll catch it somewhere right about here, maybe right at the 38 mark, because I'm anticipating a run up to probably 40.50 to 41 sometime early in the week, middle of the week. Don't know how good my crystal ball is, but looking at the trend and the patterns, I think we're going to see a reversion, and we're going to come back up to tag this line again. And reasoning behind the support line, I did not go off these two ticks right here and this tick right here. Instead of using those, I rather went off of where I've got a sustained line. I split the difference right here, but I was looking at this tag, this tag, this tag, this little full run right there, almost tagged, caught a little bit before the fall through. So I see more support on a horizontal running through here than I do just off a little 3-pointer. And if you look at the 3-pointer, if I jump right off there, it doesn't even make it to the bottom of this run right here. So I viewed that as I viewed being down here at the 33.74 and this range right here, I viewed that as being weaker as a support than actually being at this 35.72. I think that support would actually hold up better. And if we come out here, we see that, of course, it didn't even... Was that 35.72? Yeah, the 35.72, and we come back and see, was this 36... What do we tag there? 36.13. So yeah, that support, my support line's holding up better than this little punch through and that little run below. Now, granted, this little run below, was it 2 days? A little bit over 2 days right there. It would be very helpful that we could go back and watch the videos. Yeah, it definitely would be helpful. Like I said, I am planning on doing videos. I don't... Oh, hey, I didn't know I could grab that and move it. That's kind of cool. I don't play with these that often. I just started playing with the lines on Wednesday night. So I'm like, oh hey, this is cool. Oh, I can move these around. And usually I look at the patterns, and I see the trend lines on everyone's, and people put hundreds and hundreds and hundreds of lines out there, and it's like, just looking at the movement, and just kind of, at times I'll just kind of do the scroll over and see, and just kind of figure my channels like that. But I think I might start using the lines better. It's certainly for the sake of the stream and for videos. Just trying to see the way I look at things. Yeah, and that's why I want to start using the trend lines, because my brain does weird things at times, and sometimes I have to figure out what I did to make sense. Hey, Marine Corps Brat, thank you for popping in. Had a live stream that you actually were not the first person on for. And of course, I always appreciate y'all stopping by, even if y'all can't stay, popping in, hitting that like button. Oh, it was wonderful Thanksgiving. We end up Aldi's has sweet potato casserole with pecans and cranberries in it. Oh my god, that was so good. So yeah. Hope you had a wonderful Thanksgiving and had some good time with the family and ate some good food. And hope you're feeling better after your migraine, because I remember you were saying you had a migraine the other night. But so Trapper, a lot of the times when I'm looking at these bolt put spreads, it just comes down to I like I believe in not getting super greedy. So I will actually go, I could even look on the day chart. Does the day chart give me enough? Let's come down to the 4 hour. Where are we? Just still trying to hang on. Yeah, drink water. That I know. Usually when I get head migraines and stuff, it's from dehydration. So really, Trapper, your entry points on bull put spreads really a lot of it has to do with what kind of risk you're willing to take. I do like the 34-35s. Those are fairly consistent. If you get a break below, and again you look, if you look at 35.49 is where this where the trend line is. So if you kind of look out and see how many days you actually spent below, we don't have many occasions. They may push us down during the week, but a lot of times we fight back. And I don't remember. I could go through here and look and see the last time we had a week close out below 35. But I think I'd be having to hunt through quite a bit. And I just kind of view that as a safe entry point. If we drop down and I see the 34-35s pick up a price that actually seems relevant, because you don't want to lock up $100 earning a $6 premium. That's just that's not cost effective. If I can get in anywhere above $20 to $25 per contract, then yeah, that might be worth. Basically, I'm getting a 25% return on locking up. You lock up $100 per contract. Well, if I get 25% back over the period of a week, who wouldn't take 25% on their investment, per week? And you do that even if you're only doing it with doing one contract, doing it with $100. Okay, so you do that for 4 weeks in a row. Well, now you've got $200. So you could enter into 2 contracts, and now you're earning, say this exact same contract. Say you keep getting revisions, you keep hitting the same levels. Well, that means that the 2 weeks later, you'd have another $100. So you could sit there and keep using it like compound interest. Well, eventually, you'll be entering into 4 and 5 contracts at a time. That's why if you're doing, if you had $1,000 laying around from the Wednesday video, I like $1,000. It's a nice round number. Entering into 10 contracts. So you get in, and if every week you're entering 10 contracts, well, this week, getting $270. So that means the next week you can enter into 12 contracts. Well, if you enter into 12 contracts, you can see how this can actually start generating capital for you. And and I've got an 8 to 5. Oh, Clay Rose video just went. Somebody go get first comment. So you can see how this will generate more capital for you and expand your position, because I get paid every 2 weeks. Well, you know, I don't make, tens of thousands of dollars. I have bills to pay. I have bills that come up every 2 weeks, and it's nice to be able to use my options to generate money outside of my paycheck that I can use for investing. And you reach the point to where you've got enough positions bouncing around, your portfolio will support itself. I think it's been a month and a half since I've even put any cash into my portfolio, since I've put any money from my paycheck into my portfolio, because it's at the point where it's generating its own revenue. It's generating its own income to use for its own investing. So you get that snowball effect. Yeah, Simon, that's yeah, I get those notifications. There's a reason why I'm the carbon fiber viper. It's like every day when Clay gets in the stream, he knows I'm already in there. So yeah, what I was actually looking at for Monday, because this is actually really cool. I think I touched on it a little bit on Wednesday. So you saw. Oh, give me a second. Who do we still have in chat right now? I know we got Simon in here. Is it Simon and Marine Corps Brad or Simon and Trapper? So what I'm actually looking at, we saw this week, being a holiday week, being a short week, we saw lower volume, we saw prices drop lower. So what I'm actually looking at doing this coming up week... Okay, Trapper, you're still here? So what I'm actually looking at, Trapper, this is the option chain for the week before Christmas. So what I'm looking at is I might actually slow down on other option positions, and I might focus on the options ending on the 17th. These are the December monthlies, and I think entering in on these, taking this might actually be a little bit larger position, because every contract that I enter on this bull put will end up locking up $100, and that's money that I'm not going to touch. I'm not going to enter into another play where I could potentially lose it. I might lock it up on either 33.34s or 34.35s, preferably 34.35s, because the 35 that is, your increments of 5, your 35, 40, 45, 50, those are key psychological levels of resistance. So I think entering the 34.35s, there might be a reason I gravitate more to those, because I know that level of resistance it's a key battleground. So if I were to enter into 10 contracts, lock up $1,000, collect $460 premium, give or take, and then when the week of Christmas rolls around, that Monday, if these expired worthless, my collateral would be released to me. I'd be sitting on an extra $1,000 that I'd have standing by in case we get another dip like we did this week. To have that money standing by, and of course on the upper end, I'll still be earning money off my covered calls every week. So just because you shut down one side of the trade, whether it be the high side or the low side, the other one can pick up the slack for you. And that just means that on my covered calls, I might play a little bit tighter margins than I'm used to. But going through to Christmas, we might see lower volume in the weeks leading up to it. People going out spending money buying gifts, and so we just might not see as much volume. We may not see run-ups. I'd love to see us get back up in the 42-43 range, which 42-43 range, that's where my covered calls start. That's where they pick up a majority of the work. They start bringing in more of the revenue, to where when we're below 40, that's when I start getting into more of the bull put spreads. So basically, you just have to find that buffer zone where you want to undercut the market, or find the zone where you want to go over the market. Because the thing is, if I start playing my covered calls let me go back to single. And we want calls. So we're below 38 right now. My safe zone for cover calls, I'm usually at the 35 or 45 or 46. Well, if you look, 42 bucks, that's what it closed at today. Man, I threw away a few grand on the 145 December monthly. Still see, yeah, it's that comes into knowing when to get out of a trade, and that's you always see me, you see me like, oh yeah, I locked in my covered calls at 70%. I locked in my covered calls at 75%. Do not be afraid to take profits. The longer you hold them, if we get the run up and the MOS happens, your 145s are going to print. Even if we get up into the 50-60 range, you should still be making pretty good money off those depending upon when you bought them. But the longer you hold, that's why when I was talking about doing when we were running off the chart, and when we were running off this chart, and I said, where am I? Oh, that's right. I was on the minute when I had that. Well, when I was saying, this is where I would have entered. This is where I would have gotten out. I would have when I hit that. When I hit the higher low and started to run up, and I'm like, this is where I entered at. If I had money, I would have gotten calls there. I would have been looking to get calls, 3 to 4 weeks out, and I would not have. There are times you don't hold them beyond the day. Don't be afraid to day trade and take quick profits. Because those ones with that run up we had, let me see if I can get back in on that. So okay, this run up right here. So I think I got in right at, I think it was just over 38. I think it was like 38.04, 38.05 when I bought them. I think it was actually on the, might have been on this red candle, or I think it was this green candle right here. This might have been the one because we went down, touched. I saw green, red, green, which told me it was going to be an upward trend. So this was the candle where I actually entered in and got those $21. So I entered at 38.04, 38.05, right in that range. Even if I hit the bottom right here, 38.34, $3, $4.50, 35 cents each. Those roughly would have been, I would have turned in about $160 profit per contract. Had I bought in on this tick where I did on those bull put spreads and got out even at the worst place on this tick, even at the absolute bottom tick, I still would have made $140 per contract. So knowing when to get out, know when to take your profit, because I think when I looked at those, I think they were $230, $240 a contract. So I think I would have $230, $240, and I would have closed them out probably about $380 a contract is where they would have closed. So yeah, and knowing your exit point, it's you always want to get more, and I'm guilty of it too. The two prog positions that I'm in, I've got one's ending this coming up Friday, and one's ending 2 weeks after. And I actually held them longer than I should have. I had automatic sell points set up, and it ran up to just shy of those, and they did not sell. And then the stock turned around, and I'm holding them. I'm actually, the ones ending next Friday, I'm looking to get out of Monday or Tuesday. January monthly for AMC. Because this is not financial advice, don't quote me on it, but I think I still think we're going to get a run up to about 40.5 to 41. I think we might see a run up during this week. It's trending like we're going to be coming back up again. Have to wait and see what happens on Monday morning. Okay, Simon. I bought calls on Prague, expired today. I couldn't sell. What happens there? I lost a premium. I paid $150. I would have sold. I would have gotten back zero. Yeah, what happened was you got hit with the theta burn. Every day you hold the contracts, they lose value. To where eventually you reach the point to where it really has to run at the end. And the same thing happened to Devil's Advocate. The hit that Devil's Advocate took actually was the catalyst why I launched this channel a week earlier than I was looking to. I said I was looking to do this channel starting next week. I think AMC is going to break out of the wedge in 9 days and we'll start running up from there. Yeah, Simon, if you look at the chart, looking at it Wednesday, I was looking for it to come down and maybe tag this 35.50 range and bounce off of. So I'm hoping that we got that support. We're going to bounce and move back up. Because last time we tagged this low, we had a decent run up. We had this initial run up to 44.33. If we go the time before, we broke through, ran up to almost 42. We tagged it a couple times. We're kind of range bound here between 39. I'm just using rough numbers here. Between 38.87 and that line, we're kind of range bound there for a bit. When we came down, we almost tagged it there, and then we had another run up even higher, and 45.58 ran down. We broke a little bit, but we kept playing. We kept playing within a decent range of this line, and then we got another run up. Got another run up to 44. If you look, decent run up, higher run up, matching run up, and most of those were movements off of this line of support that I have. So I'm looking for coming off this line of support. I think we're still going to be bound by this downward wedge, but I think we are going to be bouncing up, and I think, like I said, I think we're going to catch it right around this 41.5, 41 1/3. That somewhere in this range, I think we're going to hit it. No crystal ball or anything, but just looking off the patterns I've seen in the past, and looking at the breakthrough that I called this breakthrough Wednesday before I even put any lines on the chart, and I figured we'd come through, we'd break through it, and we'd run down, tag this line, and run back up. And so far it's panning out like that. Oh. Yeah, but I hope we break out of that wedge. I hope we break above it. It's weird because going off what I was looking at right there, right about 41.50 is the intersection where the two wedges meet, and that is November 30th. Is that next week? Let me check my calendar here. November 30th. So if the wedge is accurate, if it does hold true, and we've already broken below it, so everyone who says that this channel is going to hold us, well, you can keep adjusting your lines to fit your wedge, but looking at the wedge that was already established off of that high and that low, which that is a pretty solid wedge right there. Looking at that, it should, in a mathematically perfect world, on Tuesday we'd be punching through. Hey, Riptide, welcome to the party. we're just going over some technical analysis in the house, just kind of seeing what's what and where's where. Kind of checking some things in the background here. So, I gotta ask, did anybody make money this week? Anybody have some good positions that panned out? Or, a lot of what I'm doing here is, you know, we've got people, that could use a little bit of help with options. We got some people who've made some awesome options trades, but a lot of those option trades that people are making, fam, all in the same house, love it, yeah. A lot of the people on the Bro channel that make money in options, they're making money just on calls. When the options market is so much more than just calls, you've got buying calls, selling calls, buying puts, selling puts. You've got all the different spreads, and if you're just using calls, if that's the only option you're playing, then you're not using the market to its potential, because you can make money both on the upside and on the downside. I wish I lost 150 on prog calls. Now, Simon, when you bought those calls, how far out did you buy them? Did you buy? Were they weeklies that you bought the same week, or were these calls that you'd been sitting on for a while? And jump over to Prague here for a second. Option single 7 days. Just kind of, for those of you who haven't been in chat before and haven't seen this setup, all I have in my Webull is my sheep position. I moved everything else off of Webull just so I could use this without, they always talk about, not showing your position, don't, bought them 3 weeks ago. Yeah, so don't want to Monday morning quarterback it, but were you up on them at any point, Simon? Did you have a chance to take profit? Because I know the last prog position I entered in, I have not been positive yet on them. I thought I was close to a bottom tick. I think I had a double or a triple test, and I bought the calls, and it punched through after the third test. So this is next week's calls. Get in. See, what I like to do at times also, if there's a stock outside of AMC, if there's a position that I'm looking to get into, I will I was up about $80 but didn't take profits, thinking it would still go up in case of, yeah, and that's so I've got two different prog positions. One is ending on this chart here, and the next is ending 2 weeks later. And the ones that are ending next week, I am actually going to be closing out no later than Tuesday. It doesn't matter Doesn't matter profit, doesn't matter loss. I'm hoping I can get up and break even on them, but I do not see holding them beyond Tuesday, because at that point theta is going to ramp up. I'm kind of looking at it right now, and yeah, when that theta starts ramping, I could it could really turn around on me and get worse. You have the Prague 750 for January. Okay. By January, are you saying the January monthlies? Because they've been building out. They built out the weeklies now. It looks like they don't have the 14th of January built yet. So I'm assuming you've got the January monthlies, Trapper. Yeah, so those ones are pretty safe right now. I've got the 750 Decembers, so I'm actually a month closer than you, and you're not even losing a dollar a day yet on those, so you still got a little bit of time on your theta. And I'll go my December monthlies. Yeah, see, I'm losing almost $1.50 a day for theta right now. So these ones I'll probably be looking to sell within the next week, week and a half. Oh wait, no, wrong ones. Okay, there we go. Those are 750. Yeah, I'm still right around $1.50 a day that I'm losing on those. I said I'll maybe hold those for maybe another week and a half, and I'll be looking to close those out. These were, I don't want to say lotto calls, but these were further out ones, hoping the hype would run. You know, I never, whenever I get calls, I try to get out of them, you know, at worst early in the week where they expire. Depends on how much I paid, how much is left, how much I'm down. If I'm still far out and they're starting to really get down, that's when I don't care, you know, how much theta's left. I'm going to close them out. I'm going to, you know, exit the position, free that money back up. You know, take whatever I can and look for another position to get into to recoup those losses. Because a lot of playing options is it does come down to risk management and capital preservation, and that's you know, I feel bad for you, Simon, holding those, you know, towards the end. A run up at the end would have been great and everything, but you got to start when you enter into these calls. You got to figure out, you know, where is your out. You've got to have a plan for how much loss you're willing to take, because if you're waiting for a run up, you could find yourself waiting till they run to zero, and that's it's happened to me before. It happened real early on when I started playing options, and I realized how important, you know, setting a stop loss, figuring out, you know, how much am I willing, what's my risk point, you know, and when do I want to get out. If they, you know, if they run back up and I start making money, lock in those profits and move on to another position. In fact, I actually have one. This is not an endorsement of a... Nope. Yeah, Riptide, a lot of times I get off work at 5 p.m. Central. So usually when I get off at 5 o'clock, I get in and I'm trying to figure out how to set the scheduling thing up to where I can have it... you know, like when Clay starts his, he has a start screen. You can jump in and, you know, everyone sees that I'm in there first, and then we start chatting and bantering with each other before the stream starts. I'm still trying to figure out how to get that set up on here. But usually when I get home at 5 o'clock, usually, you know, set up ready to go at 5:10, 5:20, somewhere around there. So I'm going to try and I'm going to shoot for 5:20 as a regular time for the aftermarket. And depending upon what time I get home for lunch, I didn't do one today because there wasn't a midday. But when we have a midday, and in between clay streams when we still have an afternoon because the stock market closed early, had we had the market been open in the afternoon, I would have done a midday option. I wouldn't call it a wrap up, but kind of an update on where the option chains are, and for us to sit around, get some people in chat and see if we can, maybe see a couple entry points into different positions and get group participation in there because as Trapper said earlier, being able to see the way my mind sees things, because you may look at a chart different than I do, because a lot of it comes down to how you read the chart affects your perception of how the chart is read. So anyone, we can all go out there and put lines on the chart, and we may put the same lines, but we may put the same lines for different reasons. Turn on the bells. Well, yeah, Riptide, I appreciate it. Like, subscribe. If you want to get out and share this on social media, share the channel, get more people in here, because certainly the more questions I get asked, I think it creates a better stream, because I can sit there and look and see what you're seeing. Clay Life has mostly bots. Well, no, because a lot of times I'm actually in Clay stream, and when I'm there, I want to participate, and I want to see what's going on, because he's got a great stream. Now this week, Monday, Tuesday, Wednesday, I may be having more streams going on because I'm on vacation. I've got Monday, Tuesday, Wednesday off, so Tuesday and Wednesday I might actually I'm gonna look and see, there might be a pre-market stream also. So maybe get a jump on the market, look and see if there are any lines, any entry points that produce into market open. But yeah, I like going on Clay stream, and I kind of plan my lunchtime around when his stream ends. That way I can, right after his ends, or within 10, 15, maybe half hour, have my stream up and running, and then mine ends and I go back to work, and then I can listen to Clay stream also. So this is not an endorsement of this stock. It's something that I wanted to check out. Because yeah, but paper trading's definitely a good tool. Yeah, I'm actually looking in the future, Simon, to do collaborations with Clay. That I even asked him the other day. His channel is kind of a parent channel to this one. I think of my channel right now, it's just kind of in addition. It's like we talk a little bit about options on Clay stream, but this is where if you're looking to really get into options, that's why I wanted to have this channel built. That way, everyone could come in here, and that way the numbers that I'm giving, that I type on the screen, and of course Pringleton, Marine Corps Brad always thank me for putting those up there, but a lot of times they're just numbers on a screen. Getting in here where I can actually bring up the charts, show the spreads, show the chart, show everything out, the technical analysis. I think this is a lot better of a way to do it, rather than just typing it in chat. But yeah, the paper trading on TD Ameritrade, yeah, that's paper trading's awesome. Oh my God, that looks so gorgeous. Paper trading is just it's a super good tool to be able to use, especially if you're starting out. When I started, I did not do paper trading. I found me a couple of super low price stocks. One of them was GSAT, GSAT. It's a cellular type company, and the other one was DNN, which is Denison Mines. And I started just playing with options with those. They're both under, when I got in, they're both under $1.25 a share. So I picked up 100 shares of each. Well, I think Denison I picked up 200 or 300 shares, and I just started playing options with those. Figuring out figure out the covered call side of the house. And yeah, it is. I certainly get a lot more information out to people, and it's a better place to have questions fielded. My God, this looks gorgeous. Let's get on the 1 hour. Oh my God. RSI is a little higher than I like, but God, that looked killer right in there. That gorgeous RSI just running under 30. What's the share price on these anyway? Closed at 56.77, down 42 cents. This is not an endorsement for Peloton. So when was that? That was... Yep. Where... Yeah, just kind of fielding questions. If anyone has any, anything they wanted brought up. Oh yeah, happy Thanksgiving, Riptide. Hey, so I know you were airborne. Did you ever serve in Germany? Because I actually, in a ramp up to go to Kosovo, I did air assault training at Oberdockstetten, and that was tied into gunnery rotation at Grafenwehr. I think you said before, Riptide, that you were airborne. Call single 0 days. All right, so Christmas. They have weeklies built out. Security for airports in Germany? Are you talking in Frankfurt, or are you talking Ramstein Air Force Base? In case y'all are wondering, I'm just kind of doing my homework. I've got a couple stocks that I'm interested in, and just doing homework for future trades. I do this from time to time. I just kind of. Oh, okay. So what? Close at 90, close at 80. Oh, civil affairs. Okay. Yeah, I was assignment. I was a cavalry scout. I did combat reconnaissance, and then I reclassed over to be a medic. And those were both in the Army. Oh, where's my pen? Don't mind me, guys. I gotta jot some notes down for. This is not an endorsement of the stock. Which is PTON. Calls. This is January monthly and 80 at 0.42. Cool. Eleven Mike mortars? Were you? 11 Mike, that's Mortarman, isn't it? Pringleton was in the military too? Oh, mechanized infantry, okay. Yeah, 'cause I know 11 Bravo's regular infantry. I didn't know 11 Mike was mechanized. Yeah, sometimes I'll set up screeners. A lot. Okay, M2 or M3 Bradleys, because I know we got the Bradley CFVs, and man, that 25 Mike, I loved thumping away on those. Yeah, Trapper. A lot of times when if I'm looking to get into something to move up, I'll look for stocks that are oversold on the RSI, and I'll also two of the. Let's see if I can get in here. 11 Charlie's mortars. Okay, yeah, I know something like that. So yeah, there are screeners built into different programs. I use a couple different programs, but you can get into the RSI and let me get on my actual screener here. I'll use the KDJ and I'll use the RSI, and just kind of use those to look and see who's oversold. And also, you look for oversold, you look for the price, you look for ones that are range bound, and you see a break out of the range. Do a little bit of research on the company, find out exactly why, and also look at other factors like there's that thing going around right now that we don't actually mention by word because they've got screeners out for those words. But if you look, I get back to last year, looking around turkey season, going into Christmas season, going into runny nose, coughing, and other things seasons. If you look, there was a huge run up, and it stayed up there for quite a while. Came down a bit. It was I wouldn't exactly call this one range bound, but for some reason there was a huge fall off here. I mean, this is on the daily. So from the 11th, they went from a close of 86.06, or from the 4th to the 5th, and then they dropped down in the 55 range. Hey, thank you for leaving the stream going. I appreciate that. And after it dropped down to the 55 range, there was a little bit of rundown, and then they caught a little bit of support, and that's what I was kind of looking at to see. I wanted to pay attention. They fell off. I want to find out exactly why this fall off happened. Was there something going on with management? Was there something going on? Was there a merger, a failed product, a recall? Something happened to make this stock price drop $35 a share. I want to know what it was, and I want to keep an eye on this to see if there's a possibility. If it was nothing major, I'm going to research this over the weekend, but if it was nothing major, that's why I was looking. If we're down in, where do we get up to? Forgetting this first week after the fall off. That's not even the first week. I'm still in the 30-minute. Looking at this fall off, if this catches some support, especially going into the holiday season, because holiday season you always start to see ads for Peloton. They have the one where it was Peloton or Nordic Track or something, where the guy bought the exercise equipment for the wife and he ran out and was always using it. Well, stuff like this sells better going into the holiday season. So I was just kind of looking. Yeah, looking for the gap up. So what I was doing was I was actually looking for after the holiday season. I was looking at the January monthlies and looking at it. If we go back up here, the prices were up in the $80 to $90 range up here for the closes. So that's what I was doing. I was kind of looking to see, $80 calls for the January monthlies only cost me $42. Well, that might be, maybe take $200 and grab 5 contracts. Wait, give it 2 or 3 weeks. See if there's a gap up. Might, not financial advice, but that, I might be looking for a little bit of a payday there. And that's just, things I look for. I look for stocks that fall inexplicably, and I try and figure out why they fell and see if it's something that I can profit off of. But yeah, that if that gaps back up, give it 2 weeks or so for it to get back up and start to run. Could be a pretty easy score right there. Just got to do your homework on it. But yeah, it's I think it was this long run of RSI, because God, they were down 14 something in here. I think I saw 14. Oh God, RSI dropped below 10. Yeah, something major. Look at all that selling pressure that came in. Somebody got scared. It gapped down for whatever reason. People got scared, got out of the position. Thank God we don't have people like that in AMC. Also, if you notice AMC Trapper, I every once in a while I'll look at volume, but to me, just seeing the length of the candles, even upper wick, lower wick combined, that doesn't matter if it's full body or not. I don't pay too much attention to volume. It's more about the movement, RSI and the MACD. Those are the ones I like to watch. Yeah, because right there, 14 million. Some of these smaller candles. It doesn't trade much, but when it gets some of these big candles, huge candle, and then a run up afterwards. They had a lot of support step in there. But yeah, that fall off, that was brutal. Oh my God. So yeah, I might get some far out calls for Peloton just to see what happens. I'm also I won't put their tickers on and everything, but also looking towards online universities. Online universities, any kind of web meeting type places. I'm looking at those. There's talk of a new Victorian period coming on. We'll just call it the Victorian period. New Victorian period coming on. So things like Zoom any kind of web meeting, any kind of online colleges. I'm looking to get into some of those right now, uh, just because it is that season again. So some of those plays, if they'd gotten pushed down because everyone's out and about right now, but if people are going to be spending more time hanging out at the home with their families, if you catch my drift, uh, some of those might be companies that I'm going to be looking into just because it's going to come up as a necessity. The people would be doing more of that. Companies that handle cyber infrastructure. Of course, not just like Nvidia and AMD, but I'm talking companies like Cisco that make modems and routers. If more people are going to be doing stuff from home, if they have to increase their web capacity, people might be looking to get new modems and routers. Also, with I'm waiting to hear back on what's going to happen in India, because Clay's been talking about India looking to pass laws with sheep and everything. For the most part, the laws are irrelevant to me, but I look to invest in the companies that support the infrastructure and not the companies themselves. It's like, so if everyone's looking towards electric vehicles and uh, electric vehicles, I'd be looking more towards entering into companies like ChargePoint. You know, you got to have charging stations out there. Well, who's handling, the infrastructure bill looking to expand the EV sector? Well, we're going to need more charging stations out there. Okay, if they're expanding the EV sector, that means you're going to be looking to the materials market to see. I've already got two lithium positions. I'm in SLI and LAC because in order to make those batteries, you're going to need lithium. You're going to need zinc. You're going to need, you're going to need all the components you need for the manufacturing of those. Okay, well, what companies manufacture the batteries themselves? Because a lot of those batteries are made off-site and brought in for the vehicles. Tesla, their batteries. If they order the batteries from somewhere else, well, who makes the batteries for them? Don't just look at investing in Tesla. Look at the infrastructure that supports the company. So yeah, they're just. Yeah, that was a stunt. That's why there's some things you can do, especially with crypto. Look into. There's talk that Riptide. I got murdered. I actually hold AT&T. That's part of my regular long-term investment portfolio. I also would play the Condor. It's a four-leg option strategy because AT&T traded in a nice little corridor between $28 and $29. It was like clockwork. Sometimes it would jump over 29, but I would play Condors on that, and I had a fairly large position when they ran down from 28.75 and they ran down to in the 25 range. I got murdered on them. I still hold my AT&T position, but as far as options, that merger and the share price bottoming out, that I got killed on those. Which just means I'm investing at AT&T at a lower share price right now, so I'm trying to average down on those. But I know it's going to come back up with the expansion of the 5G infrastructure. Invest, pick your favorite cellular company and hold. If they have a good dividend, buy them and hold them. Even if the prices drop, they'll come back up. Okay, so if you saw, I was doing. I've been talking quite a bit lately about the bull put spread. So in the bull put spread, let me just get over to single. This will make it a lot. Yeah, we're on single. So a condor is a 4-leg option trade. And what you end up doing now, if you manually, or if you use the auto ones on Webull, they have them set up to them set up and they're range bound. There are other platforms, other brokers out there where you can build custom condors. So say we were on AMC, I would actually build out a custom condor, because what you end up doing is you end up it's a combination of buying a call, selling a call, buying a put, selling a put, and it creates a bracket, or almost like a plateau. So what you would end up doing is use some of my favorite numbers here. So it would be on the call side of the house, and you can set them up if they allow custom builds. You can do it pretty much any way you want. But I would end up selling a call at 5:30 and buying a call at 5:16. So this right here gives me $14 profit, or $14 of premium. Go to the other end, and I would end up selling a put at 35 and buying a put at 34. So you have a bull put spread, and then you have a bull call spread, both bracketing in with your share price, or with the current price right in the middle. As long as it stays in that bracket, you're in the money for 100%. And look at this. So you would earn, this one would earn you 16. So you earn $16 premium on the low end, $16 or $14 premium on the high end. It would end up getting you $30 premium. The farthest strike price you have is $1 apart, so you multiply it by 100. You would put up $100 collateral and receive $30 premium with it set up like this. And as long as it stays range bound, those calls and puts would expire worthless, and you keep the premium. Now they actually have it set up. I can show you a representation here. So on here you would click on the condor, and you see how it has your range bound. It's already built where it gives you a $1 increment to each leg of the condor. So we're at 37. Yeah, so we're at that right now. So you would either pick, I would want, see, theirs even lays it out funny just because it's going off the first option price. But when you enter in, you can check the graph on it, and you can either sell or buy depending upon where your mark is. Wish there was a way to zoom out further, or zoom out better. So as long, oh wait a minute. Well, I think this is doing, yeah, it's doing 10 contracts at once. Let's get this down to 1. So yeah, you would buy a call. Oh, that's why. Okay, these are doing all calls. So you can do it with just doing buy call, sell call, buy call. There's another way to do it, to where you do call put, or call put, which it gives you a little bit different of a setup, and adding the puts in, it kind of balances it out better. Yeah, because right now this is saying no matter what you did, you would end up making a profit on it, which you would almost never get filled on this at. Oh, hang on. Iron. I think it's the Iron Condor. Iron Condor does your, this should be your bull put spreads. Or your two different, there we go. Yeah, so on this one, sorry, it was the Iron Condor is the one that I usually run because you buy a call, you sell a put, buy a put, and as long as you're in this green range, you're going to be making money. As soon as you drop out, you lose money. But if you notice, your maximum loss is already predetermined. You can't lose any more than that. So even if it goes to the moon, you lose $50. If it drops all the way down to $1, you lose $50. That's the most you're going to lose on this. Let's do one contract just so we can. Yeah, so the most you would lose is $5 on this contract, where you have the potential to gain $95. Yeah, it's now keep in mind that is a range bound strategy. That is when you start using butterflies and condors, whether they be the regular or the irons, you want to use those on a stock that has a fairly stable share price, because it's very easy for it to move out of there. And the trouble is, if you're using it on one with lower volume, lower liquidity, it is harder to get filled on some of those. But yeah, every once in a while, I'll get a wild hair, and if it looks like we're fairly range bound on AMC, I'll push out a little bit. Granted, the further out you go with it, it does give you diminishing returns. Like if you try to have a really wide channel, you're not going to make as much. The tighter you get the channel, the more you'll actually make on them. But and the reason why you make more is it's easier for it to move out of range, and you can always get exercised on one side of it and have the other expire worthless. So knowing those are ones that those are more advanced towards playing options on. I like my two leg spreads just to because I can really manipulate and place them where I want them to keep them out of harm's way. Because I don't. It's cool running. You know, when we tell people, yeah, I'm running iron condors on this stock. Oh, how often do you hit on those? Oh, 1 out of 10. You know, I would rather have a smaller profit on two leg options that I can move and position out of the way to where I get more consistent returns. I may not get as big of returns, but if you're making $100 once out of every 10 trades, as compared to making $20 9 times out of every 10 trades, your 9 out of 10 is always going to be more. But yeah, risk versus reward. Yeah, it's I've got other option positions that I play around with. I've got a regular portfolio that's 32 different positions. But I still like to play AMC because I know it well enough, and the charts for it likes to follow wedges, it likes to follow channels, and I know the mentality of the hedge funds when it comes to the options ending at the end of the week. So I know what I can get away with. And for the AMC, I probably hit 80, maybe 90% of my options I make money on. If you average in the rest of my portfolio, that it drops down to about 70 to 75%. I do better with the options on AMC. That's why I play them so much, because they really are more dependable because of the way the hedge funds are. And hey, there's another Claybro video. Because of the way the hedge funds are and because of the way the community is, I recognize the ranges where it can move, and I try to stay out of those ranges, which is where the consistency comes from. My God, I'm really dry mouth today. I hard to believe it's 7 o'clock already. Well, it's 8 o'clock in Trapperville. But, that's, part of the reason I wanted to do this channel was to show people, how much more there is to options, how much more opportunity you have to make more money here and there, which of course you can roll into buying more shares. And that's what we're here for, to buy and hold. Well, you only have so much money working a 9 to 5. Well, if you can find a way to make the market give you more money, that's just good for the community. The more I do this, the more shares I get, and the more I'm able to hold. Oh, 8 o'clock there as well. You're both on the East Coast. Okay. Let's see. Yeah, and I have, oh. Yeah, no problem, Trapper. I'm glad you were able to stop by. Glad this was educational. Glad hopefully you picked up a few little tricks. Hopefully it'll help you make more money on your portfolio and improve your position, and that's kind of what we're all here for. And I'm happy to do it. That's why I'm here all the time. You're right, Frank. I thought we only had calls, puts, covered calls, covered puts. I see why we can get lost with that. Yeah, it is a lot of information to take in. It is more because a majority of the people out there, they just play single legs. That's all they play, and there's so much more to it, and that's why even on this down market, I was making money. When everyone's watching their portfolio turn red and wishing the prices would go up, I viewed it as an opportunity to get out here and start make more money for myself. That's if you when you learn to read the charts, if you trust your technical analysis, you can make money whether the stock is going up or stock is going down. Trapper, this is the way. Yeah, start learning this stuff. And if you know people who are looking to get into the market, and or even people who all they're of strictly the buy and hold, buy and hold, buy and hold. I'm trying to get the word out to as many people as I can. Anyone who wants to come by, participate in the live stream, ask questions. I'll run over the same information, every night if I've got people who are asking questions about it. I have no problem going over the same material, or like this evening, I had another position I wanted to check out. Well, if I enter into that, that's another example I can use to pay upon what happened if I end up going forward with it, or even the positions that I'm already in, or any indicators, because like those calls I wasn't able to get into, I still saw the entry point, or the bull puts that I mentioned today in chat. I wasn't able to enter into those because I'm not going to dip into the money that I have on standby. I've got capital in reserve in case my positions go wrong, I can get out of. And I do not touch that money. That money, that the whole purpose of that is to be a safety blanket. So there were positions that I wish I could have got into, but it's not worth the risk of not being able to exit a position if it turns bad on me. And that goes back to how much risk can you take, is knowing, recognizing the risk and making sure you leave yourself enough capital to get out of it. That way you're never stuck in a position. Cheers all. I'm going to put my kid to bed. See y'all later. Seems I can't go anywhere without you all being there as well. Alright, Riptide, you have yourself a good evening, and if I don't see you anytime over the weekend on here, we'll all be back at it Monday, so it'll be a new week in the market ahead of us. So who do we still have in chat? Let me see. Oh, I could not have timed that exit better. What are we on here? Let's go on the 4 hour. Oh, Simon's still here. Cool. You still at the gym right now, or? Yeah, when did I get on that? Was that Tuesday? I think that was Tuesday I got out of that. That would have been the 23rd. Oh, okay. Oh yeah, no problem, Simon. And like I said, I'll be doing this on lunches in between Claybro streams, and also, I'm going to try to do this every day after the market, just in case anyone wants to pop in. So this was this was a dividend rider for me. I was on USOI, which was the crude oil ETN, exchange traded note, and I actually exited my position on the 23rd. So I got out up here, got to the end of the week, boom. That was a good timing on an exit. Yeah, I'm gonna go ahead and wrap up the stream for the evening. I might pop on over the weekend. If I do, it'll be ahead of time. I'll jump on Twitter, see if anyone would be interested, or if anyone had any questions. But pretty much this might wrap it up till lunchtime on Monday. So enjoy your time in the sauna. Have a good weekend, and I'll talk to you all next week. USO and UCO were your first. Okay. USO is actually the the U.S. crude oil. I was on USOI, which is the Credit Suisse. But yeah, take care. Have yourself a good weekend. Might look at some of those positions later on, but rock out, man, rock out. But yeah, this is going to wrap up the stream, and I'll talk to y'all next week.